Hello, everyone. Tonight, I'm going to share the concept of dollar cost averaging. So this is something that I've been practicing since I started aggressively investing in the stock markets. So sometimes you see some stocks that you like, and it looks like it's too expensive. So it's too expensive. The cost is too high. Well, it's $400. I can't afford it. It's $700. I can't afford it. For instance, you like Meta. Meta was up like 11% today. So that's like $600. So you might, oh, it's too expensive. It's too much. I can't afford it. Or maybe you want to buy Amazon over $200. So the easiest way to get into investing without getting that burnout of coughing out so much money, taking out so much money to invest is to DCA, dollar cost averaging. So it's just the practice of investing the same fixed amount of money at regular intervals. So the boring little habit framing signals that it's low effort, low stress, rather than a sophisticated trading strategy. So let's look at the concept. What exactly does it mean when we say dollar cost average? Because your dollar amount stays fixed while the share price moves, the number of shares that your money buys is going to change automatically. So on the up days, on the green days, yeah, you might be able to get some shares, right? And on the red days, you'll still be able to get some shares. So if you look at what I'm showing here, so the red days are when the price dips. You hear things like buy the dip, buy the dip. So on the red days, because it's cheaper on that day, and you had a habit of buying 100 shares of that stock periodically, maybe every week, every month. Right? So now that so let's assume that the price of the stock is $400. So let me pull a stock right here. Right. So this is Reddit. This is Reddit. Reddit, as of the time of this recording, Reddit is $197.76. So if you are interested in investing in Reddit, you might be like, it's too high. I can't afford almost $20 every month, every week. So what you can do here is to just put $100, $50, $20. There's hardly any brokerage platform that does not have the feature for uh for you to be able to dollar cost average, uh for you to be able to make recurring investing, yeah, recurring buy of your favorite stock. If you check Robinhood, if you check Webull, any of those brokerage platforms. I'm going to talk about brokerage platforms one of those days. So any of those brokerage platforms, we have that feature where you can do recurring buy. And you put a price, $20, $50, whatever works for you. Some even makes it possible for you to do direct deposits to your brokerage account from your income account. So when you are getting paid at the office, maybe $50 is going to your brokerage account. So you can use that to periodically buy your favorite stock. So in my own case, I'm going to be putting $30 every week or every month into Reddit. So what I'm doing there is to dollar cost average. So if we go back to our slide, so on the red days, my $10 was able to buy, my $100 was able to buy 10 shares of my favorite stock. Now, on the green days, when there was a spike, when the price is high, I was only able to buy 5 shares at $20 per share because it's up, right? Double the price. So it's able to just automatically get a midpoint average for your purchases. Investing $100 a month over 3 months at prices of $20, $10, $20, right? It's going to yield, corresponding shares. So if it's $20, 5 shares. On the red days, $100 gives you 10 shares. On the green days, $100 gives you 5 shares. So you have a total of $300 investment with 20 shares. And your average cost goes down to $15 per share. All right. But if you were just buying, you just buy a lump purchase over time, you may not be able to get that average. But really, it's not really about getting a low median for your stocks. The most important thing is developing the habit of investing. Developing the habit of investing. So that is what you want to do. You want to be disciplined. Don't go and be checking your brokerage accounts every day to see whether things have moved or things have just continue to invest, passively invest. Right? You don't need to be engrossed in it. So ultimately, the habit of DCA, dollar cost averaging, removes the need to predict market highs. It removes the need to predict the green days and the red days. Oh, there's a market sell-off. You don't need to panic. Still continue to buy as you buy periodically. Right? So you can automate these purchases so that your emotion does not sabotage your decisions. All right. So then the risk is spread so that you are not exposed to an unlucky entry point. Oh, you bought high today, then you buy low tomorrow. So you're able to get a midpoint, mid-range, regardless of the what the market is saying at that point in time. So this is my lecture today. All right. So DCA. So I want you to do me a favor. Pick a stock of choice. For instance, I mentioned Reddit. So pick a stock of choice. This is Reddit. If you are looking for a stock to buy, yeah, Reddit is good. Reddit has some prospects you might want to check out some stories around Reddit. So Reddit really went up today. So let's find out why the why the stock went all the way up today. Let me see here. Yeah, they launched a new brand campaign called People Are the Best, focused on human conversations and authenticity on its platform. Okay, anything else? So, what else was responsible for that jump? That's what I'm trying to find out myself. So, here we go. Let me reduce these fonts. Yep. So Reddit already has an existing partnership with Google and OpenAI worth $50 to $60 million a year. Shares jumped 12% today after optimism continued around its AI data licensing. Yeah. So that was what was responsible for that spike. So you may not want to just jump into Reddit. You can have Reddit for a long term if it's a stock that you are really interested in. So you might want to find out the best time to buy. The best time to buy. So here if you look at the charts, so I'm using Yahoo Finance. I'm using the free version. So for me, what I do is I'm going to switch this to Line. So I just look at the moving averages. It's like the 50-day moving average. So for me, I might want to consider a buy when it dips to like $150. I'm going to consider a buy when it dips to $141. All right, so this is $181. Yeah, so this is a 6 month period. Let's see in the last 3 months. Or 1 month. Yeah, so 145. Yeah, so I might be 163. Yeah. So if it drops to $163, I might go ahead and get one for myself. If it drops to 141, so it's stock market. It goes up, it comes down. We look for the red days. When it's the red day, we pounce. When it's the green day, we have fun, right? Take some profit. So don't just leave those stocks running and then they go red. Don't let the green candle turn red on you. Don't let the green turn on red in your face. So always learn to take profit. Don't leave everything running down. Then everything just goes red and you're like, what? All right, so that's the end of today's conversation. So we talked about dollar cost averaging. So now do me a favor, go to your favorite brokerage platform, look for a nice stock you love, you understand their fundamentals, begin to DCA, and just passively invest. All right. So thank you for watching. See you on the next one. Take care.